and welcome to Power Breakfast and Investonomics, an initiative at ICICI Direct. Joining us today is Lalit Agarwal, CMD of V-Mart. Morning, Lalit. Thanks for joining us today. The big talking point, of course, this week is your acquisition. So let's start with that. You've acquired 74 stores and assets of Unlimited from Arvind Lifestyle. Please elaborate a little bit more upon this acquisition and this deal that has finally culminated.
So, Samina, for V-Mart, it has been almost 18 years of its inception, and we have always been very, very clear on our growth strategy. We have always been growing at greater than 20%, 25% CAGR every year by adding certain square footage store or by adding certain in the EBITDA lines. And to that journey, we always grew in a cluster mode approach. We always grew in the northern part of the India and the western part of India, now getting into the eastern side. And we always had a question on how will we enter South India? How will we develop the business of South India? And South India for us and for India is a little different country, is a different taste with different culture and festival and kind of people that they have. So we thought, we got this opportunity of Unlimited. Arvind did a great job in managing those kind of stores. They were struggling because their primary business was more in the brand business. So we discussed and we took a great deal. There are 74 stores which are primarily situated in 7 states where we are not present. Almost all the cities are unique cities for us. So it's a complementary deal. The sizes are similar. They also are in value retail, but yeah, their average price point and their kind of customer that they were targeting is 2 notch higher than what V-Mart would have done. So we understand the value retail. We understand that consumer segment. So we thought we could do a better job, and that's what they also thought. So we actually took that we took that on a deal where we are buying their assets, we are buying their inventory in all cash deal. So we are doing this deal for maybe more than 150 crores, and we have already taken over. We have closed the deals. Our billings have started in those stores from the 1st of September. So now we already have those 74 stores in our kitty. We also have acquired a few back-end team members from them who are understanding the business, who knows the business, and who could grow that business from there to forward. So that's what we have done. For that, we had already raised the fund almost 6 months back in the QIP process. We raised 375 crore there, and out of that, we are investing almost 150 here, and we will invest more in the resource and infrastructure development that we want to do by building some warehousing, logistics facilities, and also investing in the technology business.
Lalit, like you mentioned, you've gone from being a North and East player to now becoming pan-India. I mean, these are big footprints or footsteps that you're taking in the right direction. It comes at a time when we're getting out of the pandemic. Of course, festive season is around the corner. So business, of course, should be booming as well. Give me a sense of what total number of stores stand at now pan-India, and what sort of plans do you have to grow this business as you go pan-India?
So we were at 290 stores at V-Mart, and we closed down 1 store in the recent past. And by addition of 74 stores, we are at 363 stores as of now, present in almost 25 states in India, almost covering the entire India now. I mean, definitely we always used to work in the cluster model. We will want to work in the cluster model, and we'll want to populate that model because we are already been there in small town, which is tier 3 towns, and now moving towards tier 4. And there's so much of potentiality in India because every of those districts and towns are hugely populated, and every population, every individual who is staying there really want to look good, want to have a perception and have a feeling where he wants to buy only when it is needed, but he will only buy what is needed and what he want to wear, because he follows similar role model, he follows similar movies, he follows similar net space, he follows similar television and cinemas. So he would want to look similar. And for today's child and today's, even he's a farmer's son or he's a small shopkeeper, he will want to use the best of his facility and get the best of the fashion at that price. So that's what we do. We will open up stores in those areas, and there's large potentiality in India. At least there are more than 3,000 towns where a store like V-Mart could exist. So right now we are at only 363, which I would call is only 10 to 20% of the market potential. There is huge potential, and in that particular area there are those bazaars and those markets with those mom and pop stores which are still working very high. Almost 80-85% of the business is coming from those particular segments, and the customers capacity and the capability, and their GDP, their per capita incomes are growing. So I think that there's a huge scope for us to grow and keep growing for the continuously for the next decade.
You've had a very busy 6 months of 2021. Of course, 74 stores of V-Mart of Unlimited have been added, but any sort of new store additions you're looking at for the rest of the fiscal, or would we be closing the year around 363, like you said?
No, I mean we've got plans to even open up stores as we were already doing before Unlimited, and we will keep doing that. So there are plans to. We've already added, I think, almost 20 stores in this particular year. We will
Wow.
add another 20 odd stores in till the closing of the year. So we should be above 375 store at least.
Okay. And Lalit, also there have been concerns around profitability of Unlimited given its relatively mature age profile. Of course, V-Mart, on the other hand, has shown success in scaling up in its core territories. How soon can we expect these stores to turn around gradually? You also hinted at a complete product overhaul in your recent call with analysts. Can you talk a little bit more about that and what sort of plans you have with these synergies?
See, I mean, they have done a great business. They have always tried to understand the customer. There are few gaps which I think they have not been able to still fulfill, which a value retailer or value customer would want. So we are trying to identify those products, those items which we have seen success in V-Mart, and we will bring in those kind of range in the store. The average selling price of the existing Unlimited store was little higher. We would want to bring that down because our customer segment is those customers, and we want to target those customer segment which is largely earning between 20,000 to 50,000, either they or their family earns. And we are also trying to target a lot of youth customer, because as you rightly say, they were targeting a little more matured customer, little more higher age profile customer. And for us, we believe that youth and young families are very important in today's demography of India, and we will want to continue in targeting those youth and young family, and we'll bring their assortment, their range. We'll also continue a lot of good things and successful things which already Unlimited team is doing, and which is also bringing in. So there's a lot of synergy that can be added, and we will definitely want to upheld or bring in some additional items, change a little bit item, bring down the prices, and give a higher value and higher fashion to the customer, so that those customers who are in southern part of India who has not seen such kind of product lines could actually get benefited out of this.
Lalit, you said you'd already started billing from the 1st of September. When can we expect this acquisition to turn profitable for you? And also, what sort of revenue contribution are we expecting from V-Mart 70, from the 74 stores that you've added?
So already, Unlimited had done almost 575 crores of turnover on the 74 stores in
Oh, wow.
2019 itself. So we would definitely want to retain first of all that business and try to bring in that business. But yeah, on the profitability side, don't want to hurry up, because we believe there are challenges, and there will be some time taken to overcome those challenges. And it may be difficult initially. We may go down and then we'll have to pull it up, so that every integration has those phenomena and those phases. So we still feel that at least 18 months should be given to that business. To then only we should review and understand how are we placed and where are we. So I don't want to hurry. We may get profitability even in this coming quarter, but that doesn't mean that it is profitable, sustainably profitable. So we need to make it sustainably profitable is our core philosophy. That's what we will do.
And over the course of the next couple of quarters, I'm assuming you will also undertake a rebranding exercise for Unlimited?
Yeah, so largely we've decided that we'll go with one single brand, and we will over the period not give a jerk to the customer, but over the period phase that brand out and bring in the V-Mart single label approach, so that the customer doesn't get confused and there is a new energy in the entire branding piece. And there is also a very clear message on this: V-Mart is different and the price points are a little different.
Now I want to talk about the new world, right? How does business look right now? We are staring at a festive season. Ganpati is around the corner, post which, of course, we go into Diwali in 6 to 8 weeks from now. And then, of course, the wedding season will be upon us. The first quarter of this has already seen some of your losses narrowing. You are a market leader in the sense that your recovery has been much sharper this year as compared to last year. When can we expect V-Mart to go back to normalcy, pre-COVID levels rather?
So we are looking at very good times now, and if the third wave doesn't come in and kick in, I think August has shown us good number, and we should be nearing to the normalcy in this festival if things are smooth. There is still a risk of the third wave, and we don't know, but we are gunning it for a normal year now in this particular time. So we think this festival should give us a very good input, and there is a lot of pent-up demand also which is there. So customers have not shopped for so long, so they will definitely celebrate this festival. And post the festival, there are also good marriages which are coming in. So we should see a good opportunity coming in and kicking in. So we have seen some bit of normalcy, not exactly coming back to the same figure as we were in the 2019 time, pre-pandemic time, but yeah, relatively much better.
So when can we assume it to come back to pre-COVID levels then? I mean, of course, the next 2 quarters will largely be festivity driven.
Yeah, so I mean, festival to festival, we should expect almost similar sales in this particular time is what we are going for. That's how we are planning ourselves for. If there are some restrictions by the government authorities, then it may go haywire. Otherwise, it should remain the same.
Right. You've, Lalit, also talked about in the past that there's a lot of repeat customers that come back to your stores. So talk about that for me for a little bit. And also, what does same store sales growth stand at?
So repeat customers definitely is a very big asset for us because we are there in smaller town on those high streets, and those customers who have come once and they trust us, they would regularly come. Almost 70% of our sales comes from repeat customers. So which is a huge asset for us. We've got almost 30 million customers who are registered with us. Almost 1.5 or 15 million customers are almost loyal to us, are repeat, and they come back to our stores every time. So that is a great sale. And then on your like-to-like piece, definitely these last 2 years have not been great in like-to-like. It has been negative because of the pandemic. But we expect that to come back to the original 6 to 8% like-to-like sales that we have been doing in the past 7 8 years.
Right. Also, Lalit, you do have a considerable market share in North and East, which has been really your key markets up until now. What sort of growth are we expecting there? And considering that the smaller stores have been hit pretty badly by the pandemic, so I'm assuming you will pick up a lot more market share over the next few quarters, right?
No, I mean, there are challenges to the smaller mom and pop stores or even regional retailers whose liquidity positions have tightened, whose expense management has gone bad, whose ability to procure products from the markets and the manufacturers has gone down because they are not able to travel, they are not able to come to the market and take the products. So I think there will be some consolidation which will happen, and customers or the fittest in the market will survive. So we definitely wish them all the best and try to see that they should also come along with us. But yeah, there will be some movement happening wherein some of the players, they will not go away from the market, but they may become weaker so as not to deliver the great experience to the customer. And the customer will certainly want to find out the best one providing the experience. And V-Mart has been definitely giving that trust to the customer and has been giving that experience to the customer. We expect some kind of market share coming into us. But yeah, from the other side, we are also seeing the national retailers coming into the market very aggressively. National retailers like Reliance, or Aditya Birla, or even the Judios, or even the Max. So there are national retailers who are very aggressive in their approach. They are definitely bringing in a lot of stores in this small town, and they are occupying some square feet and some attention also from the customer.
Lalit, I know this is, of course, we are looking at a very positive season coming around, but can you quantify the kind of growth we can expect? It's always tough answering those questions, I know, but internally at a board level, what is the sort of expectations or numbers that you've set out for yourself?
So, Samina, I mean, as I said, in normal times, we have always been targeting almost 20% growth coming every year, and maybe greater than that. That's what we have delivered over the past. And that's what our expectations are. That's how we build our plans. That's how we focus on our team. That's how we given the KPIs to the team. So that's our expectation. It all depends upon the external environments also. I may not be, I'm not a philosophical pandit who could expect and create a forecast, but I'll always try to say that that's how expectations are. We will try to match to the expectation. It is all about the results that we are ultimately delivering.
Oh, well, we can hope for a 20% run rate in that case. Also, you did mention, and of course, the market knows you did that QIP at the start of the year. You're a company that's known to be cash rich, debt free, always been sort of praised for the kind of tight ship that you run. Any other big acquisitions on the cards, any sort of organic growth, inorganic growth that you're talking about? I know we might be greedy by asking you whether or not there's another acquisition because Unlimited is just literally taken color now, but anything else on the cards?
Samina,
And if yes, then
V-Mart,
again, any fundraising
V-Mart
plans that
believes in and V-Mart understands this business very well. We believe that we've got a huge capability to in our team to add businesses. We are
right?
not a great inorganic player. We are a philosophical player. We believe in our own self doing, and this is one deal that we did because the opportunity was good, and then it is almost like opening a new store, and that's how we did the deal. So we will. I mean, not be very aggressive in these kind of approach. First of all, whatever we have taken in, there are problems in our particular chain also. There are some weaker stores that we want to improve on. There are some opportunities where we want to open on. And there are 74 stores that we have taken up. Our first job is to make that profitable and make that running and well done. So as of now, nothing is on the card, nothing is there on the discussion. Please be assured and let us work and focus to build this business, consolidate this business, and come back to the normal profitability that we have been delivering regularly.
Right. All of that sounds very exciting, Lalit. Good luck with business. I guess the market is as excited as you are, hoping for good things to come. Thank you very much.
Thank you. Thank you, Smina.